Shadim Shari, good afternoon. Saturday, October 5th, 2024. Welcome to the late edition of the weekend review. Normally, I get this done around 7, 8 o'clock in the morning, but today was busy in the morning. Finished my lunch. Now I have free time to do it, so let's get this done. All right, let's start out with um, Bitcoin, something that I kind of neglect for a while. And I bought, yes, I bought right here, okay. I bought at the 50, at the 20. I bought back basically, not quite. I thought I had ordered in to buy back everything that I have as far as the position I have right here at this low. Well, at this low, I mean. I bought things here and then I trimmed 3 times, and then now I bought back about 75%. Another order is down here. If it get down, if Bitcoin get to 60, then I will fully buy it all back. I thought I did, but by buying I mean I bought the IBIT, okay, the IBIT, the equivalent of Bitcoin. Easier for me to trade. I do have Bitcoin, the actual Bitcoin as well, which I don't trade often. I kind of hold on to them because the cost basis of those are pretty low, and I don't feel like paying taxes on those. Not yet. I consider my Bitcoin to be long-term hold and my IBIT to be the trading shares. So for now, no rush to add more, but if Bitcoin come down to this support 32, that's where the rest of the order is. I have an order in at 32.5 to completely restock what I bought right here. Okay, so right now I bought back 75%. Alrighty, TLT get the brunt of the beatdown yesterday because of the strong, well, 2 days in a row. Well, you can say that for the entire week between the jobless data, the ADP employment number, um, the JOLT, as well as the unemployment rate. All four key job related data was not weak, okay, stronger than expected, not as weak. Doesn't matter if you believe the data is real or fake. The narrative is the economy is fine, consumer is resilient, job market is robust. Um, we are better off today than 4 years ago. I can run down the list of narrative that fit into the economic data. It's nothing wrong here. As far as TLT, due to the avalanche of good job data all week, it's not a shocking surprise. It's disappointing. Let's not put the lipstick on the pig. It's not a surprise that it fell 5% ish, okay, or 4% ish, whatever it is. It filled the gap. Okay, so TA still matter. It filled the gap and came right down to, let me see, did it come down? Not quite, okay, but for sure it filled the gap. So can it go lower to 95 too? Yeah, it's not that far away. Okay, it's not all that far away. So now let's do a fib, just for curiosity's sake. Let's do a fib here. Let's do a fib retracement, just for curious sake. 101.64. There you go. It's kind of meh, right? It's kind of, I think a better fib is down here, to be honest, because that's the bottom. So for now, like I said, fib is one of those things where you got to pick and choose. Okay, it's let's remove this one. What if we do the fib right down here at 82.42? Let's see, 101.64, bang. Okay, that might be a better fib. Let's leave it on there for now because the 50 fib is, well, for now you have the 38.2 fib, which line up nicely with the 200 MA. Now, I'm not calling that it will come down there, but I will leave it here to see if it is a useful fib should there is further weakness into TLT. I did increase my position in TLT by greater than 10%, just to let people know that where I am with TLT. I take my position up by, I'm trying to do the math in my head, 12.5%, something like that, if I have to do the math right, either 12.5% or 13%. So that's how much I increase my exposure to TLT on this, because to me, it seemed like a nice, sweet bargain compared to what it was back 2 months ago. I take it, okay? I take the risk. All right, so let's move on. Let's take a look at the major indices. DIA. Yes, I had ordered in to do a bear spread that did not trigger because I was too cheap. It's a debit. I was trying to do a 425, 410, okay? And it did not trigger. I can't remember what I put it in, but I think I was off by like maybe 25 cents. Normally when I do a bear spread, I put it in an order and then I just let it be. I don't change it, I don't adjust it, and it did not happen because for the most part, as you can see, the didn't get there. Okay, didn't quite get it. If I think at the time when I put in the order, was on. I put the order in on Monday. Okay, and if the went higher, maybe it would have triggered. Okay, by higher I mean like maybe 425 or higher. But since it went kind of sideways, I would try again. QQQ. I did not try to short the Q. Okay, I mentioned before that if there was one indices that I don't really see the good risk reward to short was a QQQ. Right here is kind of, did it fill the gap? It did, okay, right there on this day, it filled the gap. And seasonality wise, October is a tough month to be bullish. Okay, you can be neutral, slightly bearish, wait for the dip to buy. There's a lot of things that you can do, but chasing green in October is really not something that a lot of big player or the bots are going to do. So yeah, it's not a surprise, but at the same time, it's hard to short the QQQ. I mean, not SPY, which I like. And once again, my short is a little bit too high, as you can see. This is Monday, right? I was looking to put in a short in the upper range. Like I think what I wanted was 575, 560. Okay, there's a $15 range that I want to do, and because as you can see, all week long SPY kind of sideways, didn't bust up the move. If it was popped up on big volume, that would have been great. I would have been happy to get the short to work, but nope. IWM, another one that I don't like as far as short. I don't like IWM here, but at the same time, it's also a tough spot to try to short it just like QQQ. Seasonality wise, it favor the small cap to have a good November, December kind of move. So if anything, if there's any kind of pullback into the 100 or even 200 MA, it is a buy back up the truck moment. Okay, if you see for whatever reason the kind of dump like this, you see this right here, it can happen. It happened before where it literally dropped that much in 3 trading days. Okay, so can it get down? Yeah, to me, easy. And then channel low, God, back up the bus, the van, the train. Yeah, I'm not an IWM trader, but there are points where it is a no-brainer. Okay, it's a no-brainer to do it. All right, let's move to Max 7. Let's start out with my favorite of the bunch, Google. Didn't do much all week. Okay, down here, 160. Would I sell 160, 155 spread? Yes. Okay, yes, easy peasy. Okay, and if that assign at 160, not a problem. I take it. So if you're looking to have if you're a little bit braver and willing to pay more, perhaps do a 162, 156 kind of spread. That's not that much more, but for me right now, 160, 155 is easy spread to sell for lunch money, and keep doing that until it stops working. But if you are willing to pay more, 162, 156 is not a bad trade either. Okay, if you want to gobble up 100 shares of Google, right around the 50 MA. Okay, I like Google here. Meta has been very strong, very strong. Oh my goodness, I have not trimmed. I trim not last week, but the week before on this move here. Okay, and then I'm just like, let it go. At this point, it's time to flip to a fib extension. Okay, so I mentioned this last week, right? So now I'm following through because it didn't roll over. It kept going higher. Okay, last week after 1 week, I said give it a chance to see if it roll over. If it roll over, I would have changed the fib retracement to be up there. But the fact that it goes like that, so now I'm gonna take this out right here and do where should I do my fib extension? That's the question. Okay, should I do it from here? Let's do from the low. It's always there could be many spots. Okay, just do here fib extension right here. Okay, this is where it right here. That's where the top was before, right? Make sure here. Yeah, there you go. That's so it's getting close to potentially one spot to trim at 604. Actually, no. Where is that? 608. Yeah. Well, it's I can't see what it is blocking. Right here. It's 604. Okay. 604 and then 644, 645, 644. Okay. So yeah. Well, say right here. Duh. 643. So yeah, I will leave this fib extension where it is. Certainly you can draw the fib extension with a different starting point like right here, but I don't mind it right here. Okay, so now it's in rare air. It is in rare air. Netflix kind of consolidating. This one is the same. I'm waiting, just like last week. It's not quite, if it come down below the 20 into this area below, then I would change the fib retracement with that as a top end up there instead of where it is right now. Okay, but like I said, if it busts through the all-time high, Then we flip over to do the fifth extension. Microsoft is my second favorite of the Mac 7. Okay, technically, it's actually better here than Google. So if you want to just look at strict TA, Microsoft is a buy here and now. Here and now. You're talking multiple confluence here. Okay, first of all, you got, let's zoom in. You got the 200, the channel low, the 50, the fib. Okay, everything is here. So if you buy it here, perhaps have a stop at the fib below. It's a big one. You're talking $10, $11 drop. So it's kind of dicey, but hey, that's a 4%. Okay, that's a 4% loss. If you want to do that, to me, I would rather wait for it to make a definitive move above this confluence here and then throw in a stop at this low here, which is for 414.29. So I would rather see it move above the 50. Okay, right now it's kind of pinned between the 50 and the 200. Let it clear the 50. Doesn't matter where, as long as it's above the 50, buy and then set a stop right there. I like a tighter stop. The other one is too far away. 4% is way too much. No, I don't like that at all. Okay, I don't like. No, it's too far for me. Actually, it's less than 4%. You're talking 2%, 2.5%, but still, it's $10. I don't want to do that. Amazon, not bad, not attractive enough for me to do anything, and for sure 175. Okay, channel low, 61.8 fib. Yeah, I like it. Okay, the confluence down here between 178 and 175, no brainer. All right, so just be patient. Apple, nothing here, nothing worth chasing, nothing worth. I don't like it. Okay, I wouldn't recommend shorting it either, but at the same time, I don't see a reason to buy into it. We are not that far. We are literally $10 away from the all-time high. Yeah, $10 away from the 100 MA. So it's like it's in the middle of nowhere. Okay, to me, it's just it's. But if you have it, I would say make sure you have your stop in at the 50 MA. Yeah, that would not be a bad area for a stop, right? Protect yourself. It's $5 below. Okay, $5 below. Less than that, you can always set a stop there and buy at 216.5. Buy at the 100. Okay, it's if that breaks, you likely can buy it back. Save yourself some money. Tesla. Now, if you had Tesla and you didn't sell here, I'm not sure what you're doing. It's very clear. Sell, 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 sell. So you should pat yourself on the back for buying down here and put on the dunce cap if you didn't sell up here. Easy. Okay, it's that easy. Where would I buy? If you're a fast trader, perhaps a 100. Yeah, look, the last time it broke the 100, it ran hard. It came down to the 100, it bounced. Okay, so it's always, you can look at all the moving average, but take a look at how the stock behave with a particular moving average to pick the one that you think is more important. Okay, and no doubt the 20 is more short-term important because it's indicates short-term sentiment. But once you get beyond 20 days, which is 1 month, then you're looking at the intermediate term. Last one, NVIDIA. It's a trim. Look, sell, 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 sell. Need I say more? Okay. Compared to what I have with NVIDIA, I'm down to half. All right, I'm down to half. And if I was to do a stop, probably pick, I think low of day, Thursday might be a decent stop. I have to decide, because I think I'm waiting to see if it's gonna pop, okay, over that resistance. But if it can't, and then I put in the stop, okay, because I don't mind getting stop everything all out at 120.34 and buy it back in the 116, okay. Hey, I don't mind saving $3-4, all right, on 75 share. It adds up, okay. So, but for now, what I'm doing is waiting, watching very careful, because it could be a bullish move, okay. It has been resistant, clear resistance. If it can break out here, then we can test. I do believe if it can somehow break this trend, sure, the next fib, 130, 131 area could be a trim zone, but I would be greedy and let it run. I think that it will be a year-end push. That's my guess. Okay. All right. Let's move on from Max 7. We can touch on OTEC. Adobe, I bought at 505, and I bought a lot at 500. I basically double up my position between 500 and 505 from what I had before. I started to nibble in the teens, 516, I believe, 518, something like that. But no, I like 500. It's in profit. Would I trim at 528? Yes. Okay, that's the spot. 528, 536 in there. But between 528 and 550 is the trim. Now, would I trim everything? Maybe. Would I trim everything if it get anywhere near 580? Absolutely. Absolutely. Okay. If I miss out above, that's fine. But if it can get, would I add? The question is, would I add? The answer is yes. I have, after my order trigger at 500, I went in and put in another order at 500 and another one at 498. So I'm willing to take it even higher, okay, as far as position in Adobe. I like it. I like Adobe. CRM. Woo! Yeah. Big move. Big. It filled the gap here, which is a big deal, okay? First of all, last month, it filled this gap on this move here, and then it got a nasty sell-off. Nasty. But the triangle held. Look, see? Remember, the blue line in any chart is a triangle. Not all triangle work, just like every TA, okay? Just because there's a trend line, a channel, it can break down. But the fact that it came down from this triangle high to triangle low and bust out, nice. I have not trimmed anything yet. Where can it? I'm gonna put in an indication right here, an alert. I might trim some right there. Okay. Oops. Oh, very There you go. So if that alert go off, I might trim some right there, but for sure, if that tested, I think we can go 52-week high. I like CRM. Cisco has been very strong. No chasing here. I would not do anything here. If you have it, trim, get out, set your stop. It's time to go. Okay, it filled the gap. Look, it filled the gap. Right? Let's go back 3 years. Yeah, can it test 52-week high? Going back to last year, 2-year high? It's possible, but for now, it filled the gap and stall. Okay, so at the minimum, set your stop where? Right here. 52.16. Okay, if that low does not hold, then you can see the 20 again and perhaps even the 50 or even down here. It had a great run. Remember, this is not on growth. This is on laying off and expense control and buyback. So there's a lot of good things, but it's not strong thing. Okay, there are the best growth is organic growth. Growth through expense control is welcome by Wall Street, but it's not something that's sustainable, because you can cut expenses, but eventually, unless you can grow the top line, then your bottom line is not going to be able to get bigger. Okay, so at the end of the day, Wall Street want to see both top line and bottom line growth. They don't want to see shrinking top line. They don't mind shrinking top line or flat line top line if the expense is declining, because then that means that the earning is increasing, right? That's how buy share back and lay off people. That's how it works. The top line can be flat line or slightly decreased, but the bottom line is expanding because of the layoff, expense control, and share buyback. Okay, that's the alternative that is less preferred, but it's still prefer more than the declining revenue and increasing expense. Okay, if you go back and take a look at any one of your holding that get beat up really bad, normally that's what you see. Okay, you see terrible declining, terrible combo of declining revenue and increased expense. That's the worst scenario that the market will beat up any stock. All right, last of the old tech, IBM. I'm sure it's bossing. I have not looked at IBM. Yep, keep on going. It keep on going. The fifth extension is still next level, 228.75 ish. Yeah, if you have it, congrats. All right, let's move on to pharma, and then we can do financial after that. But pharma, real quick, AbbVie, kind of sideways, meh, nothing here to be excited about. Nothing. Pfizer, sideways as well, in the gray zone. Nothing to be too excited about. It's nothing to hate, nothing to be too excited about either. I did buy. I got more Merck assigned. It hit. I thought for 2 months that we could face tax loss selling. Even as I was bullish all through the last 2 months, I felt and talk about often that when something like this that has a 20% plus decline going back the last 6 months, 8 months, it's easy for manager to pick it out and say, sell it now, buy it back later, harness the loss. Okay, so I'm not surprised. I don't like to see it, but it is what it is. I do believe the risk short term between here and the end of October is down here. Okay, can we get down to 107? Absolutely possible. Okay, possible. When I use the term absolute, somehow it does not work with possible. Absolute possible. Is there such a thing? Or high probability? How that? That's a better term. High probability that it can see that. Okay, because that's a fib, and it's also a level of, in the past it consolidated, right? It hit that, it hit that, it hit that. So yeah, it's possible. I do believe a 20 to 30% return by Christmas if you buy here is very doable. So I don't mind putting my money in there. Okay, not at all. Eli Lilly on support. Okay, the 100. The last time it violated this, it violated for quite a long distance. This time is hanging on, but the volume is not all that exciting. Okay, the volume kind of like Would I add to Eli Lilly? I added here on this day. I did. I added at 874 was the price that I bought. Of course, that's a 200, the 100 MA. I did not add any more, but I have not put in any more order. The only order I have is way down here at 858. Okay. Either that or 856. I can't remember. I know I have an order somewhere in this area of the fib, but now can Eli Lilly be a victim of tax loss selling? I don't really think so. I think whatever's going on with Eli Lilly, I don't think can it be profit taking? It can be. Somebody can realize the gain, book the gain, whatever. But as far as the fear of more dumping because of tax loss selling, I don't see it here. Okay, I really don't. When something is less than 10% from the all-time high going into October, no, it's not. It's not part of the fear. Okay, I don't see it. JSK came down into. I will start doing something this week. I had too many things going on last Friday, yesterday, with Merck and other big pharma positions, so I didn't want to be too exposed already. But I like what I see here. Now, would I sell a put spread at 37? Yeah. If it come down below 38, I would start to add shares. Okay, okay, you know me. I like JSK here. I got stopped out here on this move, and I've been waiting to buy. Okay, I like it. BIIB, I talk about potential tax loss, and here we are. I was selling at this point right here. I start to talk about BIIB going way back to sometime in August, right? At this point here, I was selling 195 spread, okay? And then I start to do 192.5 spread the last couple of weeks. And then I even go down to 190 spread last week. This week I did 187 spread, 187.5 spread, and that's the one that got assigned, okay, because of this dump here. And I don't mind. All right, it's something that I anticipated and expected. Hey, if this is not a good example of something that can face tax loss selling, what else is it? You're looking at a stock that is down since the start of the year. Even if you buy at the October low, well, last October it was quite high. So if you buy anywhere, you're looking at easily 20%. easy. Okay, easy 20%. So yeah, it's definitely a prime candidate for tax loss selling. Okay, prime. So look at that. That's pretty ugly. Look at last October. What happened here, right? Something that's an Alzheimer drug. Okay, it was going nowhere, and then the Alzheimer drug approval, and then we're back here. Why? Because the Alzheimer drug is garbage, but they have other good stuff. Okay. Last on pharma, NVO. This one I got assigned as well. I have been eyeing to buy the stock for quite some time. I've been buying Eli Lilly for the most part. Well, mostly was for weight loss drug exposure was Eli Lilly. I have never traded NVO until last week or the last 2 weeks, and I had a put 116. It got assigned, of course, because of 115. I like it here. It's at the fib. Now, can this thing fill the gap below at 109-ish? Yeah, that's not that far away. Okay, not that far away. Can it go all the way back to 105? High probability closing the gap, yes. But I don't rule out a full retracement back to 105, okay? And would I buy more? Yes. But at this point here, I like it. Another example of a stock that is down 20% plus from the all-time high, right? So tax loss selling is here for NVO. All right, let's move on to banks. Visa. For those that follow me, I thought the entire DOJ lawsuit, unfair competition, blah blah blah, was a gift to buy. Okay, and no, I don't like it here. Would I buy at the 260 something? Yeah, but yeah, if it filled the gap, I would trim, right? But no, it's right now it's in the middle of nowhere. It's sitting on a fib. I wouldn't buy or sell it. Would I buy at 272? Maybe. Would I buy down here at 267? Yes. Would I trim at the 20? Maybe. Would I trim at the gap fill? Absolutely. Okay. Would I trim at the all-time high? Absolutely. I like V. Goldman Sachs. Nothing here to be excited about. Upside limited, downside limited. If I have it, I would set my stop at the 100 MA. If I don't have it, would I do it at 100 MA? That's kind of far away, but yeah. Or you can use a fib. See, this is the problem with using the fib, right? As you can see, it tests the fib many times. And if you set a stop at the fib, you lose your share real quick, okay? And would I buy Goldman Sachs here at the 100? See, I'd rather trim. I'd rather set my stop down here, which is kind of far, but it's better than using the fib here because I think the probability of your stop trigger is very high, and then you lose your share if it popped above. So if you're willing to eat your loss, yeah. Would I buy Goldman Sachs at the fib for? Yeah, if I get stopped out here, if I have the share, which I don't, if I get stopped out at 479-ish, I wouldn't mind buying $10 lower. Okay, wouldn't mind at all. Wells Fargo, middle of nowhere, nothing to be too excited about. Potentially, if it can break this downtrend. Okay, if you draw a line, which I can do it. 62.55. There you go. Let's draw this line. If you want to do that, basically the 100 MA, that could be a spot that can run it all the way to the ref high at 60. Otherwise, I would buy Wells Fargo down here. Okay, to me, that's an easy decision. If you want to buy Wells Fargo, put in an order 51 down to 50, something in the middle as well if you want, but that's the area. Up here, risk reward, not worth doing anything there. Schwab, fine. I sold a couple of put spread, expired worthless. On weakness, I will keep doing the same. I keep selling 62 of 63 put spread. I still have 200 shares there. And I like Schwab. I'm surprised that Schwab does not, well, I have said for a while now that Schwab is tied to TLT in its fortune. And to be honest, I'm surprised at how strong Schwab behaved yesterday, given how poorly TLT did all week. Because given where TLT is, there is no way Schwab is in any financial condition to come out at the end of this quarter and say that, oh, we resume stock buyback. That's what happened last time. Let's not forget. Last quarter, when they said, we're not buying back share yet, it's been over a year, and the stock did this. Given where TLT is, how can they change the story? The story is still the same. Their balance sheet is not at the point where they can use cash to buy back stock. So be very careful. I don't see a fundamental change in Schwab where it's like, oh, it's a no-brainer. Okay, I like Schwab when TLT was healing. Right now, TLT is flatlining or declining. Definitely not going higher yet. We just have to wait for econ data to change the story. So Schwab, nah, okay, not nice. Let's end this on energy, which I don't like one bit. Okay, but this is all geopolitical nonsense. And nothing you can do about it, okay? Nothing you or I can do about it. For those that speculate on oil and go long, congratulations. For those that got short squeeze, bummer for you. I've been selling puts at 66 and below, and they made money. Okay, so I can't complain, but at the same time, there is no way I will be buying oil here. Yes, the political situation and the situation in the Middle East is very troublesome, and it can have a bigger impact on us as far as inflation, because you know what I say, it does not look good for inflation if we do this. Okay, short term is fine, but it needs to retrace. The good news is September oil was fine. Okay, year over year, oil was lower for the most part compared to a year ago, and even if you go back to most of August, okay, it's kind of flatline in that area, even Steven. So there's not going to be any pressure on CPI from the energy standpoint next week when the CPI come out, which is fine. But if oil stay in the mid 70s or higher for the next 2 or 3 weeks, then the October CPI number is going to be under pressure from high energy, and that's not going to be good. Okay, all the narrative about high inflation returning is going to come back into the fold again, and is this going to be bad? Not good for anyone. Stock market, bond market, economy, everything. It's going to be ugly. Okay, we cannot handle high inflation. The structure of the economy, the job market is not supportive of high energy. When high energy is supported by higher demand, completely different story, because that high demand equals stronger economy. That's a good thing. But when you have high energy because of political, geopolitical, warmongering nonsense, and the economy is weak, regardless of what the politician is saying, consumer is hurting, regardless of what the politicians are saying, then we are in trouble. Okay, we do not. People cannot afford to pay $4 gas. Not when they don't have jobs. Okay, it's not a good thing. And the warmongering tyrants that we have in government, they don't care. The rich get richer. They're in control. They like chaos. They embrace chaos, and we can do nothing about it. All right, before I go, I got out of Chesapeake. Yeah, I still hold on to CTRA. Would I sell CTRA up there? Yeah, up here. Okay, if I see anything between the 25 and 26, I'm out. Okay, but for now, I don't mind holding it. As far as natural gas, what's going on with natural gas? It's moving higher, but could it be near the top? Possibly. Now, if natural gas cannot go higher and roll over, then CTRA, Chesapeake, will definitely follow its suit. Okay, it's not gonna keep going higher. It is that simple. XOM, wow, war is good. Would I buy it here? No. CBX, yeah, that was the one. I missed that one. I talked about it. I missed it. That would have been nice. Hey, 10% move. It's okay. Can't win them all. Last, Schlumberger. I still have Schlumberger. Would I trim Schlumberger? Here? Okay, this channel, this trend, bang, bang. So yeah, I have an order in to get out of Schlumberger here. Okay, so if it get to 47.48, it's gonna be bye-bye. Okay, as far as Schlumberger. That's it. I don't think I need to cover anything else because I'm doing a lot of sector focus during the week. So hopefully I will get around to different sectors every week, or at least the same one that I cycle through 4 or 5 days a week. All right, people, enjoy your weekend. Later.